What's up, everyone? I hope you're doing well. If you're new to the channel, thanks for stopping by. And for everyone else, welcome back. If you haven't already, please consider becoming a subscriber, liking the video, and leaving a comment below, as that helps the channel to grow, which results in more videos for you guys. So without further ado, let's dive in. Today I wanted to address the impact of COVID-19 to the real estate market versus the 2008 financial crisis. The COVID-19 pandemic is affecting markets around the world, including here in Canada. New developments are coming out every day, and it can be hard to predict where things are headed. The Canadian real estate market faces uncertain times, with many drawing comparisons to the 2008 financial crisis. Though it did not hit Canada as hard or last as long as a recession in the United States, 2008 was a time of uncertainty for the Canadian real estate market and the economy as a whole. Given that RBC and CIBC are now predicting that Canada will slump into a recession in 2020, it's worth taking a look at the last recession we entered and how it affected the Canadian real estate market. While nothing can predict what will happen during and following the current crises, hearing the similarities and differences laid out next to each other will present you with the challenges ahead. Similarities: fear and uncertainty. While the types of fear and uncertainty may be different, the 2008 financial crises and 2020 COVID-19 pandemic are both great examples of how fear and uncertainty can affect the real estate market. Buyers and sellers were and are asking themselves similar questions. Will the market pick up after the crisis subsides? How long will the recession last? Will interest rates stay this low for much longer? These kinds of questions may give buyers and sellers pause, as they did in 2008. Something else to consider: potential deposits could be tied up in the financial market. In both crises, stock market investors face significant losses. The TSX Composite Index has fallen over 5,000 points since February 20th, and in 2008 it faced even greater losses. If investors have lost money that could have been used to purchase property, the market could see less buyers. In 2008, resale housing prices fell by roughly 9% across Canada, with the financial market turmoil playing a significant factor. Another contributing factor to the decline in prices for resale and new homes in 2008 was job losses, as exports fell due to the truly global financial crisis. The coronavirus pandemic is also global, and though job losses are mounting quickly, Ottawa expects as many as 4 million Canadians to apply for emergency job loss funding. While both crises saw job losses, the emergency response benefit is a major difference in policy. Justin Trudeau announced a streamlined application process recently to make it easier for people to receive federal money. Workers will be able to receive $2,000 per month if they've lost their jobs due to COVID-19, a move that will help keep both renters and owners from missing monthly payments. Similar to 2008, interest rates have been slashed in Canada in an attempt to help the economy during these challenging times. As of a few days ago, rates have been dropped to 0.25%, a measure which also took place on April 21st, 2009. The bank allows a 0.25% deviation above or below its target rate, which means that a target of 0.25% and a lower bound of 0%. One slight difference between 2008 and 2020 is how quickly the Bank of Canada took interest rates down. In 2008, the first rate drop took place on October 8th, with a move to 0.25% taking over 6 months later. During the COVID-19 pandemic, we've seen rates go from 1.75% to 0.25% in just a few weeks. Historically low borrowing costs help keep the real estate market steady and give new buyers an opportunity to get in the market. The biggest difference, of course, between the 2008 financial crisis and COVID-19 pandemic from a Canadian real estate perspective is the health aspect, which obviously was not a part of the 2008 predicament. To stop the spread of coronavirus, Canadians have been encouraged to enact social distancing and self-isolation measures, which has a ton of implications for buyers and sellers. Open houses have been banned due to social distancing requirements, and showings are being conducted by appointment only at this time. We've yet to see what kind of effect this will have on the market, but it's not hard to imagine older sellers holding off for a few months, even if this is a seller's market in many areas of the country. In 2008, Canada entered the global financial crisis better prepared than most other countries. The housing inventory in Canada was much lower than in places like the United States, which had experienced a cycle of low interest rates from a previous recession in the early 2000s and invested heavily in new home starts. In addition to less inventory, Canadian lenders also had stricter conditions than their American counterparts, which helped prevent a larger housing crisis from occurring. This kept the government from taking more drastic action. During the current crisis, more action has been required due to the sudden and severe loss of jobs. Delayed mortgage payments are being offered by all of Canada's 6 big banks in an effort to keep Canadians in their homes and to help stabilize the market. The last major difference to mention that could affect the Canadian real estate market is that COVID-19 likely has an expiry date. The estimated timeline for a vaccine is still 12 to 18 months away, and there are suggestions that if the spread of coronavirus is flattened, self-isolation measures will be relaxed. In this scenario, the real estate market would likely see more buyers take advantage of low interest rates and a postponed new stress test, which would be implemented soon after normalcy returns to the country. A post-COVID-19 world awaits us, and it could certainly bring a lot of buyers off the sidelines. Thanks for watching, everyone. I hope I was able to shed a bit of light on some of the things I've been hearing and reading these past few weeks. I also want to remind everyone to do their own research and to not fall prey to sensationalized news coverage or doom and gloom outlets that only point out the negatives. Take this time off to be with your family, to learn a new hobby, or to get some projects done around the house that you haven't gotten to yet. We don't know how much longer this situation will last, but what we do know is that it won't last forever. So be proactive, stay busy, and I'll see you guys when this is all over. Bye for now. Oh, and don't forget to share this so that anyone that isn't on my subscriber list will get this information as well. Thanks, guys.